This is the easiest SMC pattern that works every time. This pattern is called the mountain's peak. Now, the first main thing you have to understand about this pattern is you're first gonna need your liquidation, your liquidity, and then your liquidate phase. Now, what do I mean by this? Okay, so right here you can see we have this level of liquidity that is formed. Now, this can be any type of liquidity. This can be your Asia highs, your trendline liquidity, or even your equal highs. But I found that the ones that works the best are the trendline and equal high liquidity. Those are the main ones that work the best, and this works beautifully when order flow is also being used. Now, the next thing I want to see is that liquidation. Right here, guys, you can see that liquidation price that sweeps the liquidity and sweeps up those stop losses. Now, what is very important is that your entry signal is only gonna be within this liquidation zone. Now, what I mean by this, right here, you can see that we have this liquidation zone. This liquidation zone is for where price actually liquidates the stop losses. So if you're a beginner retail trader, you saw this trend of liquidity, then you saw price sort of push it down from here, and then you would have looked into getting inches right around here, targeting lower levels. And what then you will be wanting to do is you want to be placing your stop loss above this high right over here, right? And as you can see, once price breaks over that high, that's what I call the liquidation zone. You can see right here, price is breaks above here, and that's what I call the liquidation zone. From now, you can enter from the liquidation zone immediately, or set a limit when price comes back to it, or which would actually be better and gives you a high win rate, is entering of an order block within that liquidation zone. And that's actually what I recommend. That's what I actually do. So your liquidation right there, your liquidation zone, and then you want to see that obviously that change of character or that shift in the market, price breaks a certain low, even breaks a high. Now the last thing that you want to see is that price then creates even more liquidity. Okay, so as I said, it could be your equal highs, trend line liquidity, even Asian RQ. But as I said, the trend lines and equal highs are the best ones. Once that happens is it's just a waiting game. Now you place your limit right over here, okay, even within the liquidation zone, and you just set and forget it. That is how it is, as simple as that. That is all you need. All you want to see is this pattern right over here: liquidation zone, liquidity, and you just enter right over there. Okay, so I'm going to show you guys some trades that I took in the premium Discord using this exact same pattern. Then we're going to show you guys some other examples just to get you guys some variety. Okay, here is the box callouts, and right over here, here's where I sent out the signal: AUD, NZD sell, entry, the TP, the SL, confluences, same exact thing, liquidation target, liquidity structure. But the main thing was this pattern right here. As you can see, there's the pattern. There was that trendline liquidity, there was the liquidation zone, and then price created more liquidity, and then price tapped into there and then started falling from there. Now we didn't get this initial entry, but then this pattern got repeated once again, and that's the wonderful part about it. It gets repeated over and over again, because now this new liquidity there becomes liquidation, and this becomes your new liquidation zone right over here, and price created even more liquidity right over here. I'll show you guys on the chart, and we just got our entry right over there, and as you can see, when as our SL, we saw managed to trade us quite well, stops break even beautifully there, TP was hit. Okay, now right over here is the example on the chart. As I said, there was that liquidation, there's liquidity, then here is your liquidation zone. This is also that also forms part of the order block. So very brief, this is also a very good example. Then you have your shift. There's that shift right over there. Now cool, we didn't get this entry, but that's okay. We do not form it in, we wait for price to create the same pattern once again. So there's that liquidation, right? Then here is the new liquidity that's created, so turn on liquidity, and not forgetting our shift. And beautifully, liquidation zone is right over here, and our order block is right in between that, and took an entry right over there. That's okay. Obviously, you know, loads of change of character, simple. Price broke this low, we entered off at this new candle. So pretty simple right over there. So you guys can diversify this however you want, but the main entry that you guys would want to have taken is right over here, okay? And then this would be new, like your initial entry when the setup itself, the pattern itself occurred. See? Yep, so beautiful. Now on some other examples. Now this is GPUSD. You guys remember how I said in the beginning how this can also be structured in with order flow? Well, this is what I mean. Right, just same pattern, liquidation zone, shift, then more liquidity, price and taps in, didn't get the entry, that's cool. Use this as order flow, okay? Price comes to there, moves again. Now this becomes your new liquidation. There's that your shift. And I can see Later on, price now starts creating liquidity. Okay, right there, there's that liquidity being created. And even so, there was even more liquidity right over here also created, but this is also the most prominent one. So you want to be focusing on the more prominent ones, like this right over here, beautiful liquidity. And then from there, that's when you're gonna place a limit. You place a limit there, and then just a waiting game after that. You can see price comes in there and just starts rejecting beautifully off of that zone. Over there, this case, well, this would have been more of a 5-minute entry. The 5-minute all block was looking much more better. There you can see. So I have to go in depth so you guys actually see that liquidity being pulled. But you guys will be accustomed and acclimatized to seeing this very much easily just looking at candles. But here you go, same thing, same thing. So let me actually draw it out and show you the pattern. There you go. Pushes, shift, price creates that more liquidity. Okay, just gonna imagine that we can see this, and then entry will be right over there. Okay, cool. There we go. Okay, guys. So as you can see, there's the pattern. Pretty simple. Rather than reverse, stop loss just above the high, and then obviously you can target any form of liquidity. In my case, I usually target the liquidity that's formed in the retracement. And usually it's liquidity like this. You turn on liquidity right there. That's usually why I target. You actually target something else. You could even target this low right over here, since we did start changing character from right above here, even to lower levels of imbalances, like over here. So you see, you can play around with your target quite a lot, but mainly, as I said, you guys know already with my strategy, I'm usually targeting that liquidity because that gets hit most of the time. Another example that would be Euro NZD right here with the buy. I'm gonna go here to the 1 month time frame. So liquidation. So this thing in the mind of a beginner retail trader, price touches the trend line that's been tested 1, 2, 3 times. They then get this weak rejection and liquidation golfer. So they just enter the trade out of there, keeping the stop just below the low, and now we see they're targeting higher. Okay, and you see what happens? Price in reverses, take them out. Okay, from there, that's when we want to start drawing our liquidation zone. Right here, this will kind of be our liquidation zone right here. Okay, liquidation zone is here. As I said, you want to have an old block that is being within the liquidation zone. Right here, this is that old block that was within our liquidation zone. Right over there, you can see it was just in the liquidation zone, nearly fast stretched. We also have this old block right over here, so we don't have to disregard these old blocks. But I'll show you what to do in the case of this where we have multiple blocks. Let's show you guys different examples. So right here, see price comes to this one. Obviously, you don't want to put your stop loss right below here, because then there's a high probability that price can even go into this one right over here. Okay, so what then you do is place your stop loss just below that low, also below that old block. If the price comes down, you know, we come into here and then start reversing, right? Same thing, you can target any type of liquidity or imbalances, voids, whatever you guys do. Right here, you go for a conservative low, right over there. Price came to fill out this void in price. Very nice. Alternatively, you can also split your position, so you can split up your risk. Say your risk normally 0.5%, right? You risk 0.25 right over here, and you risk 0.25 right over here, with the stop loss right below here and stop loss right below there. So whichever one price taps into, it's in profit. Okay, so example, you'd be risking 0.25 on this one, and then you also be risking 0.25 on this one. As I say, guys, it's just a say and forget. It's pretty simple. You just place your limits when you see the pattern occur. Okay, that's what we're doing. So this one will haven't been tapped in, but this one will be in profit. Okay, obviously using much less risk. Say, by example, trend liquidity stripped, and once we stripped that low, that recent low, that liquidity, then form our liquidation zone, which is right there. The shift, the new liquidity, and entry at old block right there. Premium old block was being used in this case. There beautifully. Hyper blocks in box. Okay, why don't we just stop us below this zone right here? I don't put my stops below this old block because it's actually something that is my premium group up. This old block right here was already mitigated. This old block was not mitigated, and also left a nice balance in price. So this one had a bit more confirmation than this one. You guys didn't have to go to kind of play around with that. And here we talk to this area liquidity. Pretty simple, same exact thing. Liquidate, here's the liquidation zone, the shift, more liquidity, entry. Simple. I'm gonna show you one more example. Now here's the last example on Euro AUD. This one is using a mix of trendline liquidity and equal high liquidity right here. And as you can see, this is also being done on a higher time frame. So this pattern, it happens on every single time frame. Your daily, your 1 hour, your lower time frames. I personally just use it on lower time frames since I'm more of a scalper. But you guys, even if you're a swing trader, you see this pattern on the 4 hour, you can do the same thing. You can do the exact same thing. See that liquidity, see that liquidations on you, then see that shift, then you see the liquidity, then you can set your limit entry, then you just wait for price to come tap into you, and then profits come in, right? So right over here, in this case, trendline liquidity is being used. So as you can see, we have this, all of this right here. This is all liquidity, all these highs, right? The liquidity. Okay, then price then sweeps all this liquidity, and then creates our liquidation zone. Okay. In this case, then you also have our pullback that formed within this area right over here. And what you need to do is wait. You don't enter just over this. Okay, you wait. You need to see more confirmations. What else do you need? Then you need a shift. There was our shift, price then broke below this low. There's our shift. What else? Then we also need that liquidity, and here's our liquidity. Beautiful equal highs. Okay, now we have everything. There's our limits right over there. In this case, you only have one order to look at. There isn't really much. So right there, we'll just people about this high right there, and then targets. If you guys want, in this case, you can be this low right there. There you go. They're beautifully nice on 6. Right, guys, that is the strategy. Thank you guys. Box out.